Good evening and welcome to another episode of the Weekly Market Wrap. My name is Daniel Ang, and today is November 24th, 2024, and we are into the last week of this month, and next week we will be into the last week for 2024, and a lot of things has actually happened this week itself. Now, before I go into the content itself, just be aware that this event has been is being sponsored by none other than IronFX, a broker with operation in 180 countries, offering 10 trading platforms with over 500 tradable instruments covering FX, metals, futures, individual shares, and of course, we have equity index and commodities. And I would like to acknowledge their generous sponsorship. And of course, the content of this presentation, I want to make sure that you are aware that this is not an offer to buy or sell any security, be it FX or CFDs, and they must not be construed as investment advice. I hope you can see me. Apparently not. All right. The trading of any kind of margin products do carry risk. Do understand your own risk tolerance before you attempt to trade any kind of margin products. And the opinion expressed in this presentation are mine and mine alone, and does not has any standing as far as the sponsor is concerned. So collectively, we will not be assuming any responsibility for whatever you do after this presentation. And of course, the content itself has not been vetted by any regulatory body. Now, with that out the way, and I want to get started. And if you have any questions, just put them into the Q&A. If you have any, let me know. And of course, this week, like I said earlier on at the beginning of this presentation, we did have something monumental. At the beginning of the week on Monday, Singapore time, we heard this news. Biden, which is the outgoing US president, has finally allowed Ukraine to use their supplied US as well as NATO country, in particular the UK and France, supplied long-range missile to strike deep into Russia, something that President Biden has been resisting until now. So it was a bit of a head scratcher why he did what he did so late into his presidency with only less than 2 months left, and he allowed the Ukrainian to actually fire this long-range missile. And Russia has already said in no uncertain term that any kind of weapon being used of such nature deep into Russia will be construed as an active participation by NATO. And he threatened that he reserved all rights to respond in the most vigorous of way. So this is very, very serious because now Russia has laid down a very red line. And apparently Ukraine has actually used those American and NATO supplied weapons, missiles to strike deep into Russia. So this is not good. And with only 2 months left, we are only about 57 days to January 20th, in which Donald Trump will be inaugurated as the 47th US president. And I think what they are trying to do here is very obvious. They want to the existing power structure wants to make sure that there is a war in which Donald Trump will not be able to control or prevent. And this looks set to be their game plan, because I've mentioned since Trump won the election on November the 5th that it's a long time from now until the inauguration day. Anything can happen, and it looks like something major has happened, and this will have consequences. Okay, right after the Ukrainian fired a volley of ATOM, which is a long-range guided missile into Russia. Within 48 hours, they fired, or rather, the Ukrainian actually fired the Storm Shadow, which are supplied by UK, and this has upped the temperature quite considerably. Okay. And Russia has actually responded. And how did Russia respond? They actually launched what was originally thought to be a ICBM. Now, ICBMs is considered to be intercontinental ballistic missile, usually never fired in any conventional war. Okay, this is the first time Russia actually used that. And it is actually very unsettling because such missiles do have the ability to carry nuclear warhead. This time, what the Russian fired obviously was not accompanied with any warhead, none, okay? But it is a new missile, and it is not long range. It is actually intermediate range, and the Russian call it the walnut, meaning to say it has multiple warheads, and they use kinetic energy rather than conventional explosive warhead. So it actually can actually cause a lot of damage because these are hypersonic, and there is no way any existing Western defense can actually take down such missiles. So I think what Russia is trying to do, I think they have actually sent a message saying that they are going to respond, and the next time when they respond, it could well be an armed with nuclear warhead. So the West still do not believe that Russia has the ability or have the motivation to actually launch a limited nuclear strike. Okay, it is something that they assume that the Russian will not do, but I think the Russians are not bluffing. This time, this is getting to be quite serious. And going into 2025, I think we are definitely going with our eyes peeled. Okay, the possibility of a pan-European war is getting very, very real. Okay, so if the war actually spilled beyond Ukraine, that means the entire Europe will be at risk. We are already seeing that in the euro, the currency has been falling, and there is that risk this time you will fall below parity and then a bit more. So there is that long-term range in which I think the euro will come under very serious crisis, and we want to watch how the currency play out. Okay. So this is the ICBM I'm talking about. Okay, they originally thought it was an ICBM, but it's not an ICBM. They call it it's actually an intermediate range missile. It is a new technology. Nobody is aware what this missile can do. So this is the first time the Russian has actually fired these new missiles, and they have gone into production. And at the same time, Russia is actually rolling out mobile nuclear shelter. So Russia is actually getting ready for a nuclear exchange. So this is no laughing matter because in Finland they are sending out leaflets to their own citizens, telling them how to survive a nuclear warfare. Okay, which is crazy. And also at the same time, in the same week, this week on Tuesday, or was it Tuesday? I think the last 24 hours, not Tuesday, you Poland actually announced that the US has actually set a new missile base inside Poland, okay? And Russia is saying that, this will be seen to be a direct challenge because any missiles that's been launched from Poland actually has the range to strike deep into Russia. So if the Russian do respond, okay, I think this Poland missile base that is being installed by the United States will definitely be one of those targets. And if a strike hits Poland, all bets are off. Meaning to say, Poland can actually trigger Article 5 of the NATO declaration. Meaning to say, an attack on one is attack on all. So we are possibly looking at a pan-European war that is right now racing towards the forefront. Okay, so we have to be prepared for that. And for those who are still invested, you want to make sure that you position yourself correctly because in a situation like this, certain asset will move. Like for example, this week we saw how gold is coming back again big time because all this has led to a rise in geopolitical tension and gold and oil and all this has been reacting. So we also see that Bitcoin has also hit all-time high. It has taken out 99,000. We are just only a hairbreadth away for the magical number of $100,000 per coin, okay, which has never been seen before. So all this, how the market reacts to the rise in tension, and we also see the accelerated fall in currencies led by the euro, the sterling, and the Japanese yen. And this is also seen to be putting a floor under the US dollars. In terms of a rise in global tension, there will be that rush to hold on to what you call it, haven assets. And part of the haven assets is seen to be the US dollars. So again, you have to position yourself in the face of this escalation in the war in Ukraine. At the same time, today, this morning, I read news that Israel has actually launched an attack on Iran, okay? But they did not target their nuclear facility. They did not target their oil field. So not sure whether the Iranian will respond, okay? But I think it is not looking good because both fronts are getting from bad to worse. So I think by the time Trump actually gets into the White House on January 20th, a lot of wars will already be very active. Okay, so this is what I just mentioned. This morning I read this piece of news say that Israel has struck a military target within Iran itself, although they avoid hitting their nuclear facilities as well as their oil fields. So that gives Iran a chance to de-escalate. If Iran choose to retaliate, of course, all bets are off. Okay, so we will have to watch this very, very closely. Now, the first data that came out this week itself, we have the Canadian data, we have the inflation data, we have the Bank of Canada releasing their core CPI numbers year over year. We can see that it came in a little bit higher than what we were known, what we knew in September. Okay, now it's at 1.7% compared to 1.6% in September. Then the plain vanilla CPI year over year is definitely gotten a lot worse. So in September, it was only 1.6%, in line with the Bank of Canada estimates. But you can see that the new headline CPI numbers for October is currently at 2%. So we can see there is a uptick in the inflation front for Canada. And this is something we also want to watch, okay? Now, let me see what else is going on. And we have here the retail sales. Retail sales has taken a nosedive. Okay, it was already quite weak, coming in at 0.3% in September. Market was expecting a dip back into the negative territory at negative 0.3. It came in negative 0.7. So again, this is something that we already knew, but this is confirmed by the data in the retail sales number coming up from the UK month over month. So again, the UK economy is looking a little bit wobbly. In Germany, we are looking at the PMI numbers. The manufacturing PMI has somehow held out, but it is still in a contraction zone. Okay, it's slightly better at 43.2, but it is still struggling. Okay, and but this is, if you look at over the last 3 months, going back all the way to July, to September, okay, we can see that it has been a marginal improvement. Okay, but definitely manufacturing in Germany is not out of the woods. Definitely, it is still very weak. And over in Eurozone, we are also seeing a bit of a rebound in the uh, in the services PMI. Okay, we can see the previous month was 41.6. Now is deep below 50 at 49.2. We can see the manufacturing has shrunk further from 46 to 45.2. So we can see that the entire Eurozone is definitely under the water. It is definitely in contraction zone. You can see that services PMI has been holding up very well. This is the first time it actually dipped below the 50 line for this year. The last time it dipped below 50 line was back in January of 2020, at the beginning of the year. So we can see that right now, where Eurozone is concerned, the services sector is back to where it was at the start of the year. So this is definitely not a good sign. UK has also seen their services PMI shrunk further from 52 to 50. Now 50 is the borderline case, meaning to say that it is not a good sign. And we can see that it has been falling steadily for the last 4 months, from 53.7. Now we are at 50. So services sector is big in the UK, and we can see that it is also backpedaling. In the US, we can see manufacturing PMI has inched up a little bit, but it is still below 50. What is really, really good about this number is the services PMI right now is at the highest we have ever seen this year. So at 57, it does look like the US services sector seems to be doing a-okay, but the manufacturing is still way underground, way underwater. So there is going to be a big act for Donald Trump to actually reshore their manufacturing, because manufacturing has been struggling throughout the Biden administration. So we have not seen any improvement in that sector there. Okay, we want to see whether if Trump is able to do what he promised to do, which is to encourage manufacturing to return back to the United States. And the way he wants to do it is through the imposition of very punitive tariff. Okay, basically encouraging overseas companies to actually set up shops within the America to actually bypass the tariff that he wants to impose. Then going forward, it's going to be a relatively quiet week. For the US, we are only looking at the PCE numbers, which is the core inflation numbers that the Federal Reserve do watch, gauge their response to the inflation. So we're going to start the week itself with New Zealand with the retail sales, no estimate here, but previously it was negative 1.2%. And in Australia, in midweek, we have the monthly CPI numbers. They expect to inch even higher to 2.3% from 2.1. Then we're going to have the Reserve Bank of New Zealand deciding on interest rate decision. They expect it to actually raise rate. Okay, so we want to watch this because New Zealand has been one of the most aggressive in actually cutting rates. So we are not sure why they want to be considering hiking rates at this moment in time. Then, of course, what I say is that the most important data for the week itself is going to be the PCE numbers for the United States. The core number month over month, they expect to remain steady at 0.3%. No estimate for the year over year, which was previously at 2.7%. And GDP annualized, this will be the second reading, and it's going to be no change at 2.8%. So no major upset is going to be expected for the PCE numbers for the United States. So volatility may actually come down unless, of course, something else happen beyond the economics. In Germany, we are also looking at CPI numbers of and both has no expectation, whether it's a month over month or year over year. And then we have the harmonized index of consumer price. Again, there's no estimate. So we will leave it at that, but it's going to be a relatively quiet week on the economic front. Okay, whether it's going to be something else altogether, we want to stay tuned to what's happening in Ukraine as well as in the Middle East, because I think these two hotspots now is dictating the markets, because we can see from the price action of the various asset class in terms of precious metals, energy, as well as Bitcoin. Of course, Bitcoin is fueled by something all very different altogether. We also knew the SEC commissioner, okay, Gensler has already said that he will step down on the day when Donald Trump is inaugurated on January 20th. So that is seen to be a bullish news, because he has been at the forefront trying to hold back the development of the crypto space. And with him gone, market do expect for example, XRP to do well. Okay, and we also see Ethereum has also been receiving the news of his stepping down very, very well. Okay, however, Bitcoin actually pulled back. Now, Bitcoin pullback is because of option expiration on Friday. So there was a ton of options that were expiring, and that the bottom line is that there is a possibility it will dip back to 85,000. But overall, the entire trend is very, very bullish. Okay, so let me go into the chart itself. All right, I hope you can see my chart here. Now, I want to show you, of course, we start off with Dow Jones. So again, if you have any question, put them into the Q&A so I can address them as they happen. Now, in the Dow Jones, I want to show you the monthly time frame. This is definitely a very bullish outlook here. Okay, we can see on the monthly, there is no sign this market is slowing down in any form. Okay, then on the weekly, we also see that it, it is the same. Okay, the market has a new high on Thursday itself, no, last week, but this week we do not have any new high. So, but you can see that the market ends on the high end of this range, and on a close to close basis, this is possibly the highest the Dow Jones has ever closed. So this is not unexpected, because if you have tension anywhere in the world, especially in the Middle East and Europe, we can see that there is that very obvious shift in capital flow into the United States. And the dollar has actually benefited tremendously from this capital outflow from Europe and the Middle East. People are parking their funds in America, and once the money hit America, they will have to convert into dollars, and from there it will most probably will flow into risky assets such as equity markets. So the Dow Jones, being a very international index, has benefited tremendously from this inflow of foreign capital into the United States. So I think this is playing out for quite a while now. The whole of October and this month in November, we can see that the dollar has been very, very strong, and this is no accident. Okay. So this is the daily time frame. There is a counter trend currently in place, but it does looks like the high that we are seeing here in the Dow Jones is very vulnerable to be taken out, and I think a high is likely. But having said that, I also believe the last week of November is going to be very crucial. There is the possibility a high may be in place in the last week of November for US equity market. So look out for sign of weakness or topping out, because as we move into December, December is going to get very, very volatile in my opinion, because for one, it's a year end. Hedge fund managers would have to present a good report card, which so far, based on what we've seen in equity markets, is very likely for them to deliver above average returns, and they need to take profit. And if they take profit, that means to say that the market may actually rally first before it comes down, going into the holiday season. So from here until the mid of, let's say, December, I think you want to watch out for some kind of profit taking by fund managers. So do not try to chase this market from here onwards. I do not believe that this market warrants such valuation. Okay, so on the lower time frame, on the 4 hours, for example, you can see the market is still rolling back. There is no counter trend in the 4 hours time frame, so it does looks like market may actually be gunning for a new high. The Tanvi is asking, the outflow from Middle East and Europe, are they coming from the area affected directly by the war, or this outflow coming from European and Middle Eastern region in general? I suppose fund managers deploy the capital worldwide. Okay, and Europe is definitely one of those trading bloc they do have investment in. And if the war in Europe is threatening to spill out of Ukraine, it will definitely impact the whole of Europe. So for the European fund managers, for Americans or those American fund managers with investments in Europe, for example, they will want to do the logical thing. They will want to pull back some of the capital, and the only way to do it is to sell off those assets and bring the money back to America. So it could come not only from the Europeans themselves, they could be also coming from international cross-border fund managers. Okay, so the same thing for Middle East. Now the world is worried, because this week is also the week in which the ICC, which is the International Criminal Court, actually has sent out an arrest warrant for the current Israeli Prime Minister Netanyahu and the former Israeli Defense Minister Galan. Okay, of course, nobody expect he to be arrested, but it sets the tone going forward. Okay, because America has already said, for all intent and purpose, I think America see Israel as an extension of the US. And if there is any country that dares to actually execute the arrest warrant, okay, the US will most likely retaliate. Okay, and they will go to war, okay, with that country if they ever dare to arrest these two characters. So practically, we do not expect that to be done, but the fact that it has been issued is big. Okay, because the ICC is made up of a 3-judge panel, and they all agree that something criminal has actually happened in that war, okay? And it will put the entire country of Israel under the microscope. So this is one thing you want to consider, okay? So based on the price chart, it does looks like a new high may be forthcoming in the Dow. So like I say, if you are a short-term trader, you can continue to buy, but I think the risk will be disproportionately high. So be very careful chasing this market ever higher. Now, the other markets we want to watch will be the S&P 500. Again, we start off with the monthly. So this is the monthly time frame. It looks very, very strong. Whether it's just on a close-to-close basis, this week, this month itself, we have a new high. Okay, 6,000 is the first time we ever see the S&P 500 traded in. So this overall outlook remains very, very bullish. Okay, and this is the weekly time frame. Again, this week we do not have a new high. The new high was actually traded last week, but the way it closes this week suggests that there may be an attempt to take the market even beyond the all-time high here at 6,025 and 0.9. Okay, so again, the closing here does suggest that the momentum is very strongly in favor of further upside. This is the daily time frame. I think there's a question here. Let me see. Is there a question here? Okay, no. Okay, now we can see the daily time frame here is also very, very bullish. Okay, we can see that the price attempts to be trading higher. So there is the risk that the 6,025.9 may actually be taken out this coming week itself. So stay tuned. Again, same outlook. I do not want to chase this market ever higher, although it does look like it may be seriously challenging this new high. You can see there is no momentum behind the daily time frame. You can see the ADX is not climbing, so there is no momentum behind this move here. So I am very suspicious about this move. And earlier on, I did mention look out for the possibility of a high being in place before the end of November, which is this coming week. Okay. Then we will want to see what else. I want to see. Okay, I want to move this a little bit. Okay, now we want to see the 4 hours time frame. This is the 4 hours time frame. We can see that market has closed on a high note. Now it's getting into that area whereby from anywhere between 5,974.5 all the way to 6,008. I think this bracket will be vulnerable for profit taking. So there's a possibility the market goes into this breakout prices. If it fail to take out 6,000.8, okay, 6008, then obviously it will actually be quite attractive to do counter trend. So for those who are brave to do counter trend, maybe you can consider doing that. I will be looking at it, and if the market does give me a reversal signal in the, let's say for example, 1 hour time frame, I will want to consider doing that. Right now, there is no counter trend in place. You can see there's no counter trend in this 1 hour time frame. Okay, but if one develop, maybe I will considering that it is actually a very low risk trade setup. Okay, right now there's no sign. Now we talk about the Nasdaq 100. Same thing. I will look at the monthly time frame. Nasdaq has a new high this month. Okay, right now we can see that the Nasdaq has been trading above possibly will challenge the 21,000. Okay, you can see that the high trader is 21,230 this month itself. Last week I believe was the all-time high. So when we go down to the weekly time frame, you can see that the all-time high was actually traded at the beginning of last week. And the funny thing is the market opened high and then closed low. Okay, so far the rebound in the weekly time frame, you can find that the market is not very strong. Okay, this is actually quite a severe pullback. Okay, it has pullback almost 75% of this bar here, which is the a fortnight ago. So you can see that this is a very, very strong move. Of course, this was on the back of Trump's winning the election on November the 5th. And this market opens higher, but it did not sustain. It closed back down, but losing back about 75% of its initial rush higher. So this week, there was an attempt to retake the high, but it only managed 50% of this drop. Okay, so it has not recovered more than 50% of last week's decline in the Nasdaq 100. So that put technically the Nasdaq is actually not very strong. Okay, there is a counter trend in place in the Nasdaq 100. The high is 21,230.9. The recovery is actually without any momentum. You can see the ADX has no momentum at all. So it does suggest opening up the possibility that if there's going to be a decline, I think the odds are higher in the Nasdaq 100. So you want to take that cue from there. This is the 4 hours time frame. You can see that the bounce back from the low for this week itself has been very, very it is struggling. Okay, so if it struggle without any acceleration, once the price get into, let's say, 21,000 onwards, it does looks very attractive to continue to do counter trend. Okay, knowing the ADX is not climbing, so I think there's a possibility that if the market goes into this breakout of prices above 21,000, it does looks very attractive from the risk reward perspective to do counter trend, gunning for a move back to here's about 19,009. Okay, but you can actually gun for 20,000. Okay, so if I sell anywhere around 21,000, I gun for 20,000. There is a 1,000 points possibility here for those who are interested. Now, when we look across the Pacific, we start off with the FTSE 100. Okay, this is the FTSE 100. We look at the FTSE. The FTSE is definitely struggling. Okay, so we can see that there was a big move last month. Okay, no, this is not even last month. 4 months ago. Okay, this is the market has not come back to these levels. 8,418. So for the last 3 months, you can see the market has been struggling. Although November there was an attempt to rally, but you can see that it is very, very tentative. That's because based on this bar alone, this pin bar, we should be able to see continued follow through buying. But for 3 months, we have not seen follow through buying. So this is, you gotta see from that perspective that there is no follow through buying. This is the weekly time frame. Market overall remains very, very strong, and the counter trend is in place. I suspect that the counter trend is not finished. There is a possibility we can do a 3-wave. Now, if this rally that we see this week freezes out, okay, there's a possibility it will come back down, okay, especially if Wall Street also do the decline. So that will also give the all other equity index the incentive to also pull back. So there is a possibility if the next pullback come, it may take up marginally 7,912. Okay, so this is the low here. So I think there will be a good chance it will revisit this level again. 100% pullback, assuming this high of 8,418.1 remains unmolested, I think there's a good chance it will come back and take out this one, 7,912.3 marginally before we see a new pattern evolved. This is the daily time frame. You can see that the last 2 days of this week has been very strong, but again, there is no momentum. Okay, no momentum at all. Okay, so maybe if you want to look to sell equity index, maybe you shouldn't be looking on towards Wall Street. Maybe the opportunity could come from elsewhere, in particularly in Europe. So I am watching the equity markets, the equity index, the European index are more closely in the face of what we knew this week. Okay. Now, when we look at the other equity index from Europe, the one that we also definitely must watch will be the DAX, which is the German index. German index hit a new high last month at 19,681. Now, we already knew that Germany is not doing well economically. The economy is definitely contracting. So it does not justify such elevated price in equity markets as far as the German is concerned. So again, this could be one possible candidate if you are going to be looking to be bearish on equity markets. Instead of being bearish on United States, I think there's a good chance the bearishness could come from the European side. Okay, this is the weekly time frame. The market definitely is struggling, so we will be seeing how it behaves. Once the market can go even marginally higher, we want to see how it reacts here at 19,500 all the way to the all-time high at 19,681. That area will be vulnerable for selling interest to emerge. This is the daily time frame. Let me increase the size for you. You can see the market is not really going anywhere. There's a bit of a sideways move. I think what may happen here is that the market go into a sideways or it move into a corrective pattern. I think there's a very good chance it will try the 18,600, which is this swing low here. 18,680. Okay, so I think right now there is no confirmation that we're going to see a reversal in place just yet. Okay, but if there's going to be a reversal, I think the European markets will be very vulnerable. Okay, so in the 4 hours, this is what happened on This week itself, we have midweek, we have a very strong rally, which did not result in a follow through. So if the market continue to go higher, I think this area here at 19,500 does looks very attractive on a 4 hours time frame. The market come back into this bracket of prices between 19,500 all the way to 19,645. That area is actually quite conducive, assuming we manage to see a reversal pattern on this time frame here, 4 hours. Even if you cannot see on the 4 hours, you can always revert to the lower time frame, the 1 hour. You can see this is so far a three-wave pattern, and the market in the 1 hour has actually peaks, meaning to say that going forward, the in the 1 hour time frame, the momentum is possibly lost, okay, on the upside. So take that into consideration. Now, the one index that I'm actually very interested is the Euro stock. Now, this is the 1 hour time frame. Euro stock is, like I mentioned previously, is a combination of French and German listed companies, more French companies than German companies in this index composition. You can see that France is also not doing well. We can see that price did come off from this zone here. This zone is what I call the very deep retracement. The area is 4,981 all the way to 5,120. The price over the last 2 months did not follow through, okay, because based on this bar itself, this bar is actually very strong. In August, we can see the market have a very classical reversal pattern that favors the upside, but there was no follow through since. In fact, prices come back down. So that also tell me that there is some kind of issue, and the market does not believe that it deserves such high valuation. So the weekly time frame, the same thing. The weekly time frame in these Euro stocks, okay, uh, does look like maybe we have seen the peak of this run. Okay, we have seen the initial move down to 4,471, bounce back to 5,071, and I think you can see that of all these bars here, there's only one positive weekly closing. Okay, and now the market has come off a little bit. I think there's a possibility it will continue to go lower, and if this unfolds in a three wave, the 4,471 may be revisited again. Okay, and here it is where it get interesting. If the market did take out the 4,379, that means the market would have turned decidedly bearish. Okay, so once the market turned decidedly bearish on the weekly time frame, it will be a big thing for me. Then going forward, I know that I want to be on the short side of this index, which is the Euro stocks. Okay, this is the daily time frame. Market did go into the very deep retracement area. That was the high traded back in September 27. The market has been coming off. So it does give us the momentum that I'm looking at, because the market has not been able to climb. Okay, in the 4 hours, we are seeing the same thing. Market did come off. The 4 hours has a rated negative, okay, and the dominant trend is down, and we have a bit of a counter trend right now, and I think top side will be quite limited, maybe up to 4,837. I think this will be the nearest swing high that we want to watch. Okay, this market is very vulnerable. Of all the equity index, I think I like this index structure in terms of looking for opportunity on the short side. Okay. Now, once you have finished the Europe, let's come over to the Asia. We'll look at the Nikkei 225. This is the monthly time frame. You can see, again, this bar here in August is very strong, okay, but there was no follow through, okay, simply no follow through, and the market has been struggling. You can see on a close to close basis, the last 3 months, even consider last week's closing, is still struggling. Okay, so definitely there's no momentum behind it, and you can see the ADX on the Monday time frame has already peaked. Okay, so again, when we look at the weekly time frame, the market having gone into the very deep retracement levels, defined as anything just under 40,000 to 42,500, the area 2,500 points is actually where this market may be vulnerable to selling interest, and it has been. Okay, so this week there isn't any big move. We can see that this week the trading range is actually quite small. Okay, then we look at the daily time frame. So daily time frame, it has gone flat. Okay, so this is a somewhat flattish kind of structure. Even with higher prices going forward, it will be vulnerable to the downside. Okay, so the Nikkei is getting ready to flip. in my opinion. Okay, so once we look at the 4 hours, the 4 hours has not turned bearish just yet. Okay, but we can see that there is a very big counter trend currently in place. So not sure whether it has enough momentum to actually go back into this very deep retracement area, defined as 39,450 all the way to 39,910. Okay, so again, if I want to be looking for bearish signal, the Nikkei is not yet the one, but I think it's something to watch. Raja Kumar is asking, how do I measure the momentum? Is it by price spike only? There are many ways to look at momentum. You can use indicators like stochastics or even the RSIs. Those are the ones that measure momentum. Okay, they measure overbought, oversold zone. You can also look at the size of the individual candle. Okay, when I say that the market is going sideways, you can see the individual candles are very, very small compared to, let's say, this one or this one, okay, or this one. Okay, these are trading range that are very, very big, and this suggests there is momentum. But we can see that over the last week itself, you can see the market has no momentum. Individual bars are very, very compressed. Okay, so means this it could be one way you look at whether the market has momentum or not. Okay, and these are the one that suggest market has momentum. You can see very, very long bar. Okay, and of course, this is suggesting market is favoring the downside. And then if you have such strong bar, okay, especially when the market close near the high, okay, it suggests there is momentum behind that move. Okay. Anonymous, I'm not sure who you are. Can I kindly look at the US 2000? Russell 2000 is not available on this platform. They don't, IronFX do not offer that. But I do trade the Russell 2000 from another platform. But anyway, because I would want to concentrate on the instrument available on this platform. So I'm not be able to show you the price structure for the Russell 2000. I think that's what you are referring to, right? So I'm sorry, this platform do not offer Russell 2000 for trading. Now we talk about the Nikkei not being ideal for trading. Let's take a look at the Hang Seng. This is the Hang Seng index on a monthly time frame. Hang Seng is actually quite vulnerable. You can see this is what appears to be a pin bar. There was a very strong rally on the back of the Chinese rollout of stimulus package in September, just a week after the Federal Reserve cut interest rate by 50 basis points. So there was a big run up, and the market did go even further. You can say that this is a classical three wave. Okay, from the low here of 14,600, the market have its initial leg pull back very, very deep, but did not quite take out the low, and the market pull back up. And you can see this structure is exactly a zigzag move. Okay, you can see that the market has 100% rally 100% of its initial leg. So this is a classical move. So what happens now? The market has come back down again, suggesting that we may be looking at lower prices in the Hang Seng going forward, technically speaking. And if you need confirmation, you can see take a look at the weekly time frame. So the day when it has the high for the year, it did not close very well for the week, you know. And the following weeks, you can see they are all black color bar, meaning to say that there's a lot of profit taking going on. Okay, so this is something you want to watch. And in the daily time frame, is there any momentum? Momentum seems to be picking up. Okay, so if this thing accelerates to the downside, this ADX is going to climb like this. Okay, and if you can see the ADX climbing like this, okay, consistently in this 45 degrees gradient, it suggests that the momentum is on the downside, and there's a danger that it will pick up speed. Okay, so again, short side, I think then currently the Hang Seng is actually quite vulnerable to further selling. Okay, based on what we see so far, and in the 4 hours, this is definitely what we are seeing. Okay, and not yeah, this is what we are seeing is actually quite weak, because the fact that the market actually closed near the low of the week suggests that there is a lot of selling going on. Okay, Tanvi is asking me what is a MACD. Now MACD is actually a moving average convergent divergent index. You can use that to trade. Let me give you an example what it does looks like. Okay, if I include a MACD, it is exactly what is this. No. MACD, let me see. Is it over here? Yeah. Okay, it's MACD. It stands for moving average convergent divergent. If I do this, you will probably see, okay, here to make it, maybe you can see it better in the daily time frame. A daily time frame. Let me compress the chart for you. You can see at the bottom here, there is an indicator. Okay, it's what we call a histogram. Histogram consists of a zero line. You can see there is an invincible line. Okay, here is the zero line. And if the index is above, okay, it suggests a positive momentum to the upside. And right now, both the average of this shaded bar here, the green color bar, and we have a moving average of that. They are both below the zero line, suggesting that the market on the daily time frame, as far as MACD is concerned, favors the downside. Now, in a very simple way of looking at it, if the index is below zero, you simply sell, okay? Because it favors the downside. And if the index is above the zero line, you stay on the buy side, okay? Because it suggests momentum favoring upside. So in a nutshell, you can look at this for maybe entry if you are going to use the MACD, okay? I hope that will be good enough for you. Okay, let me continue. So in the meantime, it does look like in Asia, the Hang Seng Index is definitely on the defensive, and more losses may be something that we want to be aware of. Very, very likely we'll see more selling in the Hang Seng. Okay, so we are done with equity index. Let's move quickly to the dollars. Okay, unfortunately, this platform also do not offer the dollar index. So we'll look at the next best thing, which is the euro versus the dollar. Earlier on in my presentation, I did mention that the fact that the German government collapsed in hours after Donald Trump announced his victory, that set the stage for further losses in the euro. And we are also having news from the ECB, which is the European Central Bank, talking about the need for further rate cuts, and that would definitely accelerate the selling in the euro. Okay, and of course, the other factor to consider is the escalation in the war in Europe, and it does looks like very likely the war in Ukraine is going to end up to be a pan-European war. Okay, and that could actually lead to a possibility of another world war, and this world war will be terrible because we are openly talking about both sides are talking about actually using nuclear weapon. Okay, there will be no winner. Okay, if either side starts to use the nuclear weapons, okay, which is something we have never seen before, other than the two nuclear bomb that was dropped on Hiroshima and Nagasaki. The world has never seen a full-scale or even a limited exchange of nuclear weapons. In the last World War, it was the US dropping the two nuclear bomb on Japan. Japan has no capability to respond, okay, by launching a counter strike using nuclear weapon. But Russia is fully armed to the teeth, okay, and NATO is also fully armed to the teeth. And if both sides decides that they have to resort to use nuclear, then that will be a bad development. Any kind of weapon, any kind of nuclear weapon that will be deployed or used in this war is going to make the European continent unlivable, because the radiation, the fallout from there will be so terrible. It is a time where we need sensible leaders to actually work even harder to prevent that from happening. But there is no adult in the room right now, okay? And the temperature is rising very, very fast, and I'm afraid it's only a matter of time, okay? If Putin cannot wait until Trump get into the office on January 20th, and if he decides to actually launch a limited nuclear strike, what you call I don't know what you call it, a limited strike, okay, it will still be very devastating, okay? So hopefully we can see, we want to see how Putin reacts. But of course, Putin will also have pressure from his other nationalists, okay? If Putin does not come across as being strong or decisive to respond to the attack into Russia by all these long-range guided missiles supplied by NATO and the United States, I think there's a possibility there could be a coup, okay, to take him out. And if Putin is being removed, whoever come in next may not play nice, okay? There are always hardliners in every country, okay? So if Putin is seen to be weak and not willing to respond in a very strong manner, there's no saying that he will not be overthrown. And if that's the case, that will be the disaster, okay? Because both sides now has taken the glove off, okay? And that will be terrible. And that will be seen in terms of currency. Okay, the euro right now does looks very, very vulnerable in my opinion. Okay, you can see that this is a long-term downtrend. This is a monthly time frame. 1.6 was the highest of this rebound, and it has gone below parity to 95 cents. And this was back in 2022, not that long ago. Okay, this was in 2022, what happened? We have the start of the Ukraine war, right? So there was a period whereby the euro was coming down. So it's again war related. Okay, of course there has been a bit of a rebound, but we can see the last 2 months, especially this month. This month low is already the lowest we have seen since when? Since 2023. This time last year, at least the market was above 106, 104, okay? But now we can see market is touching on 104, and it does looks like this month, the euro will end below 104. Sorry, yeah, 104, correct. And at the rate, I think this low here at 95 cents may not even hold. So I'm actually quite bearish on the euro, okay? So I've always maintained euro is a currency that is constructed fatally from the very beginning, okay? And I have always maintained there's a very high risk that this euro as a currency may actually fail catastrophically, okay? Meaning to say that it will actually disappear. So let it sink in, okay? If the euro disappear, it also points to a breakup of the European Union. And if that's the case, this currency will be no more. Every country will revert back to issuing their own individual currencies. The German will have the Deutschmark, the Italian will have the Lira, the French will have the francs. So it will go back to where it was before that conversion into a single currency. So this currency here is actually quite vulnerable, especially when you look at the economy and look at the war that's currently unfolding. Okay, Tanvi is asking, okay, thank you very much. Does it work in complement in tandem with ADX? It does. You see, all these indicators, if you use them at the right time, okay, it does give you a tool to actually take on the markets. Okay, but today is not the time to talk about how this various indicator works. We can have a lesson on it. Okay. Unfortunately, I'm going back to Malaysia on Tuesday. And for those who are based in Malaysia, and if you want to meet up with me, reach out to me. We can have a coffee and we can talk about markets. Okay. And okay, let's continue. In the weekly time frame, you can see the euro sell-off has accelerated. And this is a waterfall move, okay? This is a weekly time frame. So this is a terrible outlook. So far, the move is a three-wave, okay? But this three-wave looks like it has momentum behind it. Let me call out the ADX. And the ADX is climbing, and this is not a good sign, okay? It means that it suggests that this move downwards from 112 maybe is gathering speed. Okay, if it does gather strength, okay, it may punch all the way down and go for 95 cents to the dollar. Okay, in the daily time frame, you can see the daily time frame has also seen that the fall has been quite sharp. The low this week is 103.30, and we are not that far away. The moment the market breaks 102.20, okay, the daily time frame will turn decidedly negative. Okay, before the weekly will turn negative. I think the one that will turn negative next will be the daily time frame. The 4 hours has already turned negative. Okay, it has been falling and falling. You can see the ADX has been climbing. So on the short term, I think the momentum, it favors more losses ahead. Okay, This is the 1 hour time frame. There's a bit of a rebound going on, but this rebound, I don't think it has enough momentum to reverse the trend. So going forward, I think there's a very good chance if the market do rebounds into this area at 105.50. Not sure whether it have enough strength, but if it does, then consider it as a selling opportunity. Okay. Now, the other currencies are not necessarily doing better. We can look at the sterling. This is the sterling outlook. Let me show you the okay, it is definitely very much a picture similar to what we saw in the euro. The UK economy is collapsing, okay? And definitely it will show up in the currency. The sterling has not been doing very well. You can see the last 2 months, we saw very sharp sell-off. And this month itself, although we have 1 more week to go, I think we will see further losses in the sterling. So by and large, the picture points to more strength in the dollar. And interestingly, you can see that this support line has been taken up on the weekly time frame for the first time. So again, all suggests to me that the rebound in the sterling is probably already picked out at 134.30. Okay, so going forward, it will be suggesting further losses ahead. So this is the daily time frame. Again, if I call out the indicator, will I be able to see an acceleration in the ADX? It does. Okay, ADX is climbing. You can see the momentum has been picking up from here onwards, from 123, or no, 129, sorry, no, 130. 130 started to lose ground. The ADX has been climbing. So during this phase here, the market has been decidedly favoring the downside. 4 hours is the same thing. You look at the 4 hours, you can see the ADX is climbing very strongly. So again, if there's going to be a bounce, take the bounce as an opportunity to sell, because I think the momentum in a higher time frame suggests that we are probably looking at further losses ahead. Okay. So we have two currencies that favors the downside. Let's take a look at the next best currency, which is the dollar yen. Now, dollar yen again is rebounding, meaning to say the yen is losing ground again. You can see this month the highest traded in dollar yen is at 156.75. And as it goes into this area, near the 160, the market participant will be very leery of Bank of Japan intervention. Again, this week we hear that there are talks about hiking interest rates. So if there's going to be a high interest rate, the dollar yen will come off. Okay, because right now the interest rate differential between the US is actually closing. And right now we have twice the Federal Reserve actually cut rates. And the Japanese rate right now is 0.25. And if they hike another 0.25, typically the Bank of Japan do not hike by 0.25. They hike by 0.1, 0.1, very incremental. But this last rate hike we saw was a 0.25 rate hike. So there's a possibility they will maintain the same momentum, and that will further close the interest rate differential between the US and Japanese rates. And that means it will favor the Japanese yen, resulting in the dollar yen coming back down. So do watch out for that possibility that this top here, obviously we want to see from a lower time frame first, okay? And when we look at the dollar yen from this, we can see that the market actually attempt the high here at 156.75. This week we do not have a new high. In fact, this week is a inside bar. Okay, weekly time frame inside bar, and then we take a look at the daily time frame. The market is in that VDR, which is the very deep retracement. Very ideal. This is a classical reversal. The market traded very, very deep into this VDR, way above the 88.6% retracement at 156. And you can see that this is an outside bar. This is a 2-bar setup, which is a classical reversal. Market did attempt to bounce, but I think right now the market is definitely, technically speaking, very ideal for counter trend trade, meaning to say I want to be looking for a sales in the dollar versus the yen. While the dollar is definitely strong against all the other currency, the Japanese yen, because of news that come in this week, the Bank of Japan is looking to hike in December, and December is only less than a week away. Okay, so if they next meet and decided to hike interest rates, the sentiment will shift. Okay, so the strong dollar scenario may not stay the same for dollar yen. Okay, So do watch out for a possibility of dollar yen topping up. In the 4 hours time frame, you can see that there is a bit of a struggle going on. So if this end up as a three wave, if this end up as a three wave, this is how you can see it. Okay. Yeah. Equality is 156.50, and it is inside this very deep retracement, very ideal for counter trend trade. Okay. If this actually happens into this bracket 156.40 onwards, it looks very attractive to sell because you only have to risk no more than 40 pips, okay, in exchange for the possibility the market coming back down here to 152. Okay, so it's a good trade if this actually happens. Dollar Canadian is also something that you want to watch. Dollar Canadian has been very strong, which is very much in line with the dollar strength narrative. So continue to edge higher, but you can see that it is not having a lot of momentum behind it. On the monthly time frame, of course, we still have the ADX climbing and suggesting that there is still that momentum favoring the dollar. Okay, so just be aware that the current strength in the dollar could be a result of all this geopolitical tension, both in Europe and the Middle East. Okay, so there's nothing to see here. There is no counter trend in the weekly time frame. The daily time frame, there's a bit of a counter trend. Okay, but by and large, it is still favoring the upside. So I don't see any trading opportunity in dollar Canadian at this moment in time. Okay, I do not want to sell dollar Canadian because I don't believe the Canadian dollars can be stronger than the US dollars because the Canadian economy is definitely weaker than the US economy. So there's no reason why we should be looking to buy Canadian relative to the dollar. Okay, so the other one that I think should be slowly getting into frame is dollar Swiss. There's something that's moving in the Swiss. Okay, now the National Bank of Switzerland actually did quantitative easing as well. Now, if you understand quantitative easing is central banks, creating money to buy their own government bonds. Okay. Now, the Swiss National Bank did something very unusual. They created the money, okay, the money supply, but they didn't buy their own government bonds. They actually bought other countries' sovereign bonds. And I think right now, if you look at the size of the Swedish bank, okay, the combined size of those banks are actually bigger than the GDP of Switzerland, okay, which is a bit scary because imagine if there's going to be a crisis in the Swiss banking system, the Swiss government will be in no capacity to bail anybody out, and the one that we want to watch will be the largest, the UBS, okay. Hey, is UBS still around? Okay, anyway, you want to look at the Swedish bank, okay? And there's a possibility they may want to unwind. And if they unwind their QE, that means they will have to sell off their holdings of all these foreign treasuries, government bonds. And once they do that, they may want to bring back because if you sell off your foreign assets, you want to bring the currency back. And that means you have to buy the Swiss francs. So let us sink in. If the Swedish National Bank unwind the QE, they will have to sell off foreign government bonds. And once they do that, they will have to buy back their own Swiss francs. Okay. And that means the dollar Swiss may actually flip to the downside. Okay. Remember, the Swiss franc strength represents not the dollar strength. Okay. So it would actually be a play on this. And you can see this chart here is a little bit weird in the sense that the dollar is strong, okay, but it is not as strong as compared to the euro or compared to the pound, okay. So there's a good chance that the Swiss may gain strength over the next few months if the Swiss National Bank actually started to unwind the QE, okay. So this is something that you want to also be aware of. Now, this is the dollar strength. The dollar has been very, very strong, very much in line with the euro story, okay? But there is a danger here that the strength here going into 2025 may dissipate, okay? And it may turn into a negative play in the dollar Swiss. It has not happened yet, okay, but I think you want to watch the fundamental, okay. If there is going to be a three-wave rally taking out the 92 cents, it starts to get very vulnerable. If this only is a three-wave, the next move next year could be to the downside, so favoring the Swiss francs. Okay, right now it is not showing up in the chart just yet. Okay, in the chart we are still seeing dollar strength. All right, just not I'm not saying that you should be watching this currency to actively trade it, but I want you to also be aware that of the Swiss National Bank desire to unwind the QE. Okay, right. Any other currency pair that I can share with you? You guys want to see any other currency pair? Okay, I only track the major. I didn't track the minor currencies. Okay, Raja Kumar is asking Eurozone currently, how is the individual currencies are traded against each other? Right now, there's no other currencies. They have decided to use one common currency. So in Europe, in European Union, euro is the currency. Okay, the Swiss franc is not part of the euro currencies, so definitely they have their own individual currencies. But the rest of them, the Italian, the French, the German, they all decided to use one common currency, which is the euro. So there is no other currency. Okay, but if the euro disappear for whatever reason, then of course the country will have to go back to their own generic currencies. Okay, why is dollar Canadian coming down when the dollar is rising? The dollar rise, yes, it is still rising in Swiss term, okay, but it's not rising as much, okay. What I'm saying that the dollar Canadian strength is also quite evident, okay. The dollar is not necessarily coming off against the Canadian dollars. I've mentioned earlier on, the Canadian economy is definitely weaker than the US, so there is no basis for the dollar Canadian to come off. Okay, in fact, I think there is that floor that has already been pinned underneath the dollar Canadian. So unless something else happened, okay, the dollar strength is very evident against the major European currencies, except the Swiss, not even, I think it's including the Swiss franc, and it's definitely against the Canadian dollars. Right now, we're also seeing a bit of a strength still ongoing in dollar yen, but I'm saying that in December, because of the Bank of Japan already stated they may be looking to high interest rates. So that will be putting a cap on the dollar yen further rise, because if dollar yen gets anywhere near 160, the risk of Bank of Japan coming in to intervene again is very, very high. Okay, so the dollar is basically right now very, very strong. Okay, you can see the dollar strength across the board, whether it's against the Sing dollars, against the ringgit, is definitely strong. Now, to give an example, I want to show you the dollar Sing. Okay, although this platform do offer dollar Sing, I don't trade the dollar Sing. This is the monthly time frame. The market is basically sideways from 121 half all the way to 145 half. So there's a 2,000 pip range, and the market hit a bottom recently at 128 again, and it has been rising for the last 2 months. And we also see the ringgit also stop rising, okay, in dollar term, and it is quite universal. And it is sometimes cannot be explained because that month in September is when the US start to cut interest rates. So usually if you do your normal correlation, a cut by the Federal Reserve, okay, the interest rate should actually favors the dollar to come off. But the dollar actually start to rise from that particular incident onwards. After 2 rate cuts, the dollar is still very, very strong. And there is definitely something else that's causing the strain of the dollar. And this can be seen as a capital flow, okay? That's leaving areas in which, there is heightened tension, okay? And is spilling over to across the entire spectrum. Okay, so this is why we are seeing dollar strength despite the Federal Reserve cutting interest rate 2 times in a row. Okay, so dollar Sing is actually a good currency to watch because it's very clear cut. Once the dollar Sing start to rise against the Sing dollars, it is almost universal that it will rise against all other currency. Okay, I don't trade the dollar Sing, but it's a very good currency pair to actually monitor. Okay. Right, let me continue to go beyond currency. I want to show you this. This is the gold chart. Gold has a big move this week. It has lost quite a bit of ground this month, but you can see the way it closed, we are not even done for the month yet. We have one more week to go. And if this bar here turn positive, meaning to say it closed higher than where it opens for the month, this is a very, very bullish development because this is already a pin bar. And if this pin bar turns out to be a white color pin bar, it is going to be so strong. Now, this is the opening price. Okay, this is the opening price. The market opens at $2,743.45. And the closing is not that far from the opening. Okay, if this week itself on Friday, the market ends for the month of November and it closed above $2,743.45, it will turn this market into a very, very bullish outlook. I tried to buy, but I didn't manage to buy it. Okay, I placed an order to buy, but the market didn't go down enough for me to buy. Okay, so you can see the strength is actually quite strong for the for the uh for the gold market. This is a very, very strong closing on a weekly time frame. It closed right at the height of the week. Okay, so there is going to be follow through momentum. Okay, in the daily time frame, I think the market is getting ready to take off, and this coincide. You see, day after day, Monday, Tuesday, Wednesday, Thursday, Friday. And what happened on Monday? Biden actually approved the Ukrainian to use their long-range missile to attack Russia. And they did. On the very same day, the Ukrainians fired the first volley of Atom missile, okay, into Russia. And then 2 days later, they started to fire the UK supplied Storm Shadow, okay, which is another long-range missile. So we can see the escalation in Europe is causing the gold prices to reverse this entire move here. And the fact that it closed at the high of the Friday move, okay, suggests that the momentum is definitely going to come and take out this high. Where will the market go? Nobody knows, but a new high could possibly happen this coming week. Okay, so just be aware of gold renewed strength. We can also see that in the silver market. Silver doesn't have as nice a chart as gold. Okay, gold right now looks super, super strong. Okay, but silver did not close on a positive note just yet on the monthly. Like I say, we still have one more week to go. This thing could actually change to end up as positive. So when we look at the weekly time frame, it is only beginning. Okay, so in terms of possibilities, I think the gold will be taking the lead again. Okay, silver will be playing second fiddle. Okay, so if you miss the move in gold, maybe you can consider jumping into silver because both should move in tandem. Okay, the move is not very, very strong yet, but this is a pin bar at the low here at $29.67. That's a pin bar, and it's followed by a flush. And for all I know, this week could be another strong move in the metal complex. Okay, so stay on the long side if you can. Uh, Aussie dollars. Yes, I have shown you Aussie earlier on. Oh, I have not, right? Okay, after silver, I'll talk about Aussie. Okay, but it should be the same. The Aussie is dying. Okay, so if you are looking at the silver, this is the 4 hours time frame. The market has not picked up speed yet. Okay, so the ADX has not climbed like what we saw in the middle of November. But if it does, if you see something like this, you just want to adopt a more aggressive entry method. Okay, right. Aussie. Thank you. This is the Aussie on the monthly time frame. The Aussie is dying. Like I said, the Aussie long-term outlook is weak. Okay, it top out at 110.80, and although it has not traded to the low of the year just yet, but I think it's a matter of time. The 61 cent will be taken out, and in fact, it will take out the 55 cents. Okay, Australia is definitely in the rope right now in terms of their economic performance. So it's only natural we will see lower Aussie rate. Okay, so I think the basic directional move in the dollar is quite clear. Dollar right now is very, very strong, despite 2 interest rate cuts. And the thing about interest rate cut is that the Fed may actually slow down the interest rate cut. At most, they do one more rate cut in December, and then that's about it. Okay, because inflation numbers are beginning to show up, suggesting that inflation may be reigniting. And if they cut rates further, it will further inflame inflation. So I think there is that possibility the Federal Reserve will hold their horses as far as further rate cut is concerned. Okay, so the outlook for Aussie looks just as bad as the euro. Okay, they all have the same technical picture. They all looks really, really weak. Okay. Now, if the price of if the Aussie on the daily time frame breaks the 63 cents, it's all over. Okay, that will be the medium term outlook. Right now, it's still positive. Okay, but if you take out 0.63 half, it's technically over for the Aussie. We can definitely see lower prices. The ADX has not climbed yet, so there is no acceleration. Okay, if there is an acceleration and it's below 63 0.6350, I think it's all over for the Aussie. Hopefully that is good for you, Suman. Same. Swiss unwinds QE is strong or weak for Swiss franc. I have already set up the scenario for you. Let me explain. The QE done by the Swiss National Bank did not result in them buying the Swiss government bonds. Instead, they bought other people's government bonds, okay, which is very, very different from what the Japanese are doing, what the Europeans are doing, and what the Americans did during the QE. Okay, so if they have to unwind the QE, meaning to say that right now they have holdings of foreign government bonds, they will have to sell them off. If they sell them off, they will have to take back the proceeds from those sales to bring it back home, and the only currency back home is the Swiss franc. It means to say that there will be a strength. We should be able to see strength in the Swiss franc. It will mean that the dollar Swiss may not continue to go higher. It may actually come back down. So it will be a good for Swiss franc if they do the QE. Davidson is asking, okay, can I analyze the gold market? I just did, right? I just did, okay? So hopefully that was good enough for you. Raja Kumar is asking, last time when dollar was increasing, Sing ringgit was also rising. Okay, and now this time when the dollar is rising, Sing ringgit is falling. Any reason for this? This year, I think overall the Malaysian economy has been on a very firm footing. Okay, so the inflows of investments, the FDI into Malaysia is actually still ongoing. So I think overall the Sing ringgit rate will still stay elevated. Okay, but this year we can see the ringgit has actually bounced back very, very, very strongly. So that is impacting the near-term outlook. Unfortunately, I don't have the Sing ringgit rate on this platform. Okay, but if you go to TradingView, you should be able to see the Sing ringgit rate, and you take your cue from there. Okay, I think it's a blip. Okay, the Sing dollars will always remain strong. Okay, for reason because we import practically everything in Singapore, and we have already seen how the Singapore government deal with imports. The only way to make sure that we don't bring the inflation into Singapore is to maintain a strong Sing dollar exchange rate. Okay, so that would result in the Sing dollars perpetually being strong. Okay, we have no other way because we import practically everything that we need. Okay. What's the best currency pair for trading? There is no such thing as the best currency pair. It all depend on your preference. For right now, I want to be selling the euro, selling the sterling, selling the Aussie, and maybe the opportunity could come from dollar yen as we move into December, because the Bank of Japan is going to meet again to decide on interest rate policies going into the last month of the year, and they have already sent out signal that they are looking to hike. And if that's the case, there's a possibility that the dollar yen rate will be capped, and maybe we want to look at dollar yen. In terms of opportunity, because the dollar has already moved so much already. So if you go in and buy the dollar at its current rate, it means to say you sell the other currencies, you are selling near the low of this range. Although there is possibility of further losses in the major currencies against the dollar. But if you're looking for a move that is very early in development, we could possibly see that in dollar yen. So that is my take. Okay. Platinum. I have not met. Okay, I tell you what, Tanvi, I will put up the platinum analysis next week. Okay, because I didn't do it right now. Okay, now let's take a look at oil. Oil has been very, very strong. The monthly time frame, Now, this, you see, the oil market is long-term bias is up. Okay, the market hit the top of 126.47 at the peak of the war in Ukraine, and since then it has been coming down. Okay, so the market has been coming down because the global economy has stagnated. China has not been doing very well this year. Okay, so there'll be less demand for oil, right? And of course, Trump says if he come into if he get re-elected, he's going to encourage America to produce more oil, to start drilling for oil. So on a net, there will be more supply coming into the market. So that will be seen to be negative. But technically speaking, because oil prices are currently in that very deep retracement area, which technically favors buying the dip, okay, because the trend is still basically up. Okay, so this area in which where the oil market is actually very conducive for buying. Okay, so we can see that the prices hit a low of $64.75 3 months ago, and there has been up and down. But basically, we can see that if the war in the Middle East, especially if Iran retaliate against today's Israelis air raid, then that could again put uh, oil under focus again. Okay, so this is the weekly time frame. Again, coming in from a very low base, $66.51. So you can see where it closed this week. Very strong, above $71 per barrel. We have not seen this price in terms of closing prices for the last 3 weeks. So we can see this is actually a very strong move because this is an outside bar. You can see the low here is lower than the previous week low. The high here is higher than the previous week high. So this is a strong reversal pattern. Okay. And the daily time frame, you can see that the ADX is beginning to climb. Okay. So this one, I actually was long crude oil, and I have taken profit because I saw this as a simple move. Okay. On the 4 hours, you can see that I am looking to this move, and the market has actually been very strong. So I had a relatively good week for the for oil. Okay, so oil right now, when you look at the fundamental, there's still an oversupply. There's still very weak global demand. Okay, so that should actually not cause a major rally in gold in oil just yet. Uh, Unless, of course, there is a major escalation in the Middle East in terms of geopolitics. Okay, that will actually cause oil prices to go to actually surge. Now, don't forget, Russia is also a major oil producer. Okay, although the sales of Russian oil has been sanctioned and they are not able to sell as much as they like to, but it is still an oil producing nation. So staying long definitely makes more sense than selling. Okay, but we want to see how the technical unfold. But this week has been a very strong week for crude oil. So stay long if you can. Okay. And now I will be looking for another opportunity. Okay. Now, Bitcoin. Bitcoin had a fantastic week. Now, you guys heard of MicroStrategy, right? MicroStrategy has been the only reason why Bitcoin has been so strong. Now, this movement of late this month, okay, especially after Donald Trump's win on November the 5th, has been very much conducive to cryptocurrencies across the board. Okay, and MicroStrategy has been, if you want to understand how the latest conversation has been shifting, because Donald Trump's talk about Bitcoin, and he wants to build a strategic reserve of Bitcoin, and he think that Bitcoin, if it continue to rally, okay, right now we are already close to $100,000 per coin. What if there's another 10x? Meaning to say one coin is worth $1 million. And US government holds a lot of Bitcoin because they're actually able to recover those they have been scammed. They never return back those coins. They actually confiscate those coins. And the US government has a lot of Bitcoins. Okay. And MicroStrategy is a company in which its share price is profit from the holding of Bitcoin is more than the value of their company. So they have gone into another round of funding. They have been selling their company debt. Okay. They raised another $3 billion, and they are pumping this new funding into Bitcoin. Okay, so single-handedly, I think MicroStrategy has been behind the rally in Bitcoin. Okay, so of course this coincides with, this year we have the launch of Bitcoin BTC ETF. So all this has shown that the big institutional players are in the market. This is not caused by retail. This is caused by institutional buyers. So again, if everybody is buying, who is selling? You got to ask the question. At some point, you need new guys to come in to sustain the prices. But everybody in the political establishment, especially the big American banks, are basically behind this move here. Okay, so there is possibly further upside. Yeah, if you believe what we are seeing in the chart here. On the monthly, this is a very, very strong move. Okay, on the weekly itself, it's the same thing. The market is so strong for the past 3 weeks. Okay, currently trading at 57,430. Okay, so because of the option expiration last Friday, there's a bit of a profit taking. Right now, this profit taking only result in $2,000 pullback. Okay, could it be more? We will have to look at the daily and the lower time frame. There doesn't seem to have a lot of pullback. You can see the pullback on the daily time frame is so shallow. And even if you look at the 4 hour, it's not deep. Okay, we have a bit of a profit taking going on, but it's not deep. Okay, so the net conclusion is that Bitcoin is still very, very bullish, technically speaking. Okay. Raja Kumar is asking, when the Swiss is buying other countries' bond, how can it be quantitative easing for Swiss? Now, quantitative easing means they want to be they want to cut interest rate to the point where it's so cheap, okay, then they'll flood the market with liquidity. But you see, when you do QE, you are also very mindful that you don't want to create inflation. So instead of uh, allowing the newly created currency to be slodging in the own economy, you go and buy assets. Okay, basically the traditional way is to buy debt instruments. Okay, and then you monetize it and turn it into a asset. Okay, and instead of buying their own, because the domestic bond market is not that big in Switzerland on the relative basis, they decided that it's better to buy other people's bonds, especially American bonds, right? So American bonds pays northward of 5%. Why not? Okay, you hold on to those, and then now that you have to unwind those, you are definitely having to sell off all these assets. So yeah, that will be my simple explanation. Okay. Right. Anything you want to see other than Bitcoin? Maybe we look at another one. Okay. The one that I think is going to be interesting is this one. Okay. Now, earlier on, I did mention, right? The head of the SEC has resigned, but he will only resign officially on the day when Donald Trump's uh, uh, move into the White House. That will be January 20th. Okay, so there is 2 more months to go before he actually steps down officially. But the fact that he announced that he's going to resign is actually very conducive to this coin here. This is Ripple. Now, Ripple has been in a lawsuit with the SEC for many, many years. Okay, and the guy who is behind making life difficult for the crypto community is actually this guy Gensler. Okay, and he's stepping down. So that is seen to be positive. You can see the market reacted very, very much. Okay, first rally was the Donald Trump effect after he won the election, and this is the second one. Okay, the second news came in, and the market took off. So there is possibility we can see some more gains in the Ripple. The Ripple market, this is basically parabolic, right? Okay, there's a bit of a profit taking going on at $1.26, 62 cents. But again, you can see this is actually very, very strong. Okay. Near term, we see a bit of a profit taking. We can see that the ADX, okay, is beginning to peak. Okay, so near term there will be some profit taking, but you can see this is like a cobra move. Okay, when the cobra raises its head, this is exactly how it looks like. Okay, so there is a possibility of further gains. We will have to watch this. Okay, we have finished the next pullback, so now we have another pullback here. So this is the new one. It is not fully formed yet, but I can already start to think where it will move next. Okay, maybe somewhere here. Okay, right. Okay, guys, I think I have shared enough with you. And unless you have more things you want to ask me, I will end the session here. Now, for those who are stationed in KL, like I said, if you want to have a coffee with me, I'm more than happy to meet up with you. Just reach out to me. Okay, guys, have a great week ahead, and I'll see you next Sunday. Bye bye.